Good afternoon, everyone. Welcome to Hit the Bid here on November 30th. This is Ty Robbie here with your Week 48 Market Watch. Hope everyone enjoyed their Thanksgiving holiday and the long weekend. We did have a short trading week, so we are going to take a look at the few trading days we did have and see what opportunities are waiting for us as we move into Week 48. So let's jump right in here and get started. First up today, we have our February live cattle on the board. We did have some mixed action last week with the nasty open that was bought back up into the weekend. Monday's action opening limit down here with that big gap down following the packing plant news. However, we did see another gap lower here on Tuesday that was bought back up. This market putting in a near-term low here after the big nasty gap down that gets bought back up here. Did see that relief rally come into play as we did start to get bids back above Tuesday's high here on Wednesday and Friday's action surrounding the Thursday, the Thanksgiving holiday there. Relief rally here on light volume, typical signs of just a basic relief rally here and a big picture downtrend. Wednesday and Friday's action pushing higher here up into this prior support here at that long-term support line, which is this pink 200-day moving average. Up here, we are expecting this prior support to turn into resistance. We do have lots of overhead supply here, so we expect to see the bears step back in. Sellers start to get aggressive here in the week ahead and turn this cattle market lower as it continues this big picture downtrend. We do have a pretty tight window here between our pivot points for the week, given the big rally here on Friday. Really light volume though here, so not really favorable rally or something to expect any new highs to come from. As we head into week 48 though, if we do get early bids above 219.32, which was Friday's high, expect this thing to continue to test this 20-day moving average and potentially push up here into the low 220s. We do have lots of overhead supply here as the sellers are still in control, and we expect to see them get aggressive here in the week ahead. If we do get bids there above 219.32, look for this mark to kind of pull back up into here, start battling it out here, and see some balance action. We want to see this market kind of balance out here and trade sideways and draw a good line to trade around. At the moment, our bear pivot for the week is 217, but that's something we will be keep updating here as we move into the new week. Could be offering a good selling point here if we do continue this relief rally up here into these major moving averages and some of these prior week value area highs. Expect to see some resistance anywhere here between 220 up to 225. If you take a look here on our intraday charts, we can see lower highs here continuing over the last few weeks, and this market is starting to pull back up here into the prior week's value area highs. This 220 to 222 area is going to be a spot where we're going to see bears start to step in and offer some selling pressure. If this market is able to get back above that and continue that relief rally here, should start see it pushing up here towards this 50-day moving average and about this 225 mark, where we are going to see more of this overhead supply start to step in. Value area high here over the early part of the month, right around the 225 to 226 area, is going to be the next spot where we expect to see some selling pressure start to step in. If we do get that relief rally to continue early into the week ahead, those are some spots to keep an eye on for the sellers to start stepping in and getting aggressive once again. We expect to see the bears use these resistance levels to turn this market lower and continue this big picture downtrend and start heading back down there towards $2. If this market is able to just immediately reverse here early on Monday, look for this 217 mark to be the line in the sand for the bears. Offers down here below 217 could get the ball rolling lower sooner than later. So that's going to be the spot we're going to keep an eye on here as we move into week 48. Bears are going to keep selling this market lower. Next stop here is going to be last week's point of control down here right around the 207.5 mark, which was also pretty close to this limit down move here we saw on Monday. Pretty heavy volume here in between 207 and 208, so expect to see this market get pulled back down here as this point of control will begin to act as a magnet if we do get some offers pushing this market lower early in the week. Below 207 there in last week's point of control, this market is going to open up and continue pushing lower. Look for these spring 26 contracts to start attacking that $2 mark and potentially probing that down into the buck 90s. At the moment, this big picture downtrend is rolling, and we expect to see the bears step in. Whether we continue this relief rally early next week or we just hit the ground running and see some offers down here below 217, we should see some sort of downside come in here in the week ahead. If we have to wait and be patient as it pulls back up here into the averages and offers a better selling point, we'd be happy to see that. But this big picture downtrend is in control, or still intact, and the bears are in control here, and we expect to see these prices continue drifting lower here over the next week. Jumping over to the feeder market now. Similar action here with that big gap down on Monday, seeing the limit and being locked there throughout Monday's trading day. Once again, another gap lower there on Tuesday as well. That was bought back up. Getting this relief rally underway from these oversold levels, hitting that $3 mark briefly there on Tuesday before rallying into the weekend. Wednesday and Friday's action seeing pretty nice gains here, pushing up there to that 20-day moving average. This fast moving average here at that 20-day is going to be a spot we're going to expect to see sellers step in and offer more resistance. Plenty of overhead supply here. Whether this market continues rallying a little bit early next week, or if we just hit the ground running below 322, we expect to see those bears continue pushing this market lower. Once again, we have a pretty tight window here between our pivot points. So if we do get some bids above Friday's high, be patient, let this thing kind of test out some prior resistance areas. This feeder market does have some resistance up here, anywhere between 325 and 330. Lots of value area highs up here. We do have plenty of sellers that are going to be waiting to push this market lower. We want to see this thing continue to balance out and draw a good line to trade around before we commit to any more downside. But we do expect to see the bears turn this thing and get this big picture downtrend rolling lower once again. This market, we'd like to see it kind of balance out and pick up some more sellers up here in the high 320s to low 330s. We do have resistance all the way up here into the 340 mark, as this big runaway gap we saw here back at the end of October is going to keep a cap on price here. Even if we do get up into those areas, it's going to be a tough spot to chew through. Lots of overhead resistance, a lot of overhead supply here. Look for the bears to step in and the sellers to attack this market once again and continue pushing this market down here towards $3. Similar to that live cattle market, if I can get back to our, there we go. Similar to that live cattle market, we do have this point of control down here around 305, which was that limit down move here on Friday. If we do get early offers down here below 322, or if we need to balance out up here a little bit more and continue this relief rally early next week, we still expect to see the bears step in and sellers keep pushing this market lower. First stop to the downside is going to be this 305, which was our point of control from last week. That's going to be the first stop the bears are going to start attacking. If we do continue down there through 305, look for this thing to keep on cruising down here into below $3 and into those high $2 range. So 280 to 290 is still in play here as this big picture downtrend remains intact. Expect to see some resistance step in and this cattle market continue lower here in the week ahead. Let's jump over to our corn market now. We did roll over into that March 26 contract here in these corn futures. Last week we did see a little bit of balance action down here as this market really contracted nicely and tightened up here across the 21st, 24th, and 25th of the month. Really nice contraction here. If we take a look here on intraday charts, we can see this market showing really nice contraction shape, building up some volume here and drawing a hard line there at 439, which was the breakout point here for Wednesday's action. Did see that nice break here above 439, getting this relief rally underway here after this move from 457 all the way down here to 435. This market just kind of hitting some oversold levels. Still in a pretty sticky, rangy area here right around this 440 to 450 mark. So these will be our pivot points as we head into next week. This relief rally we saw here in the during the holiday week. Typical light volume action here around a holiday week. Kind of counter to the most recent move here as this market kind of drifts back up. We still expect to see the sellers holding this market down here around the 450 mark. Look for this market to keep chopping up here in a rangy sideways action here between 440 and 450. At the moment, we are pretty neutral here as this market has been comfortable around this $4.50 mark here on this March contract. But also, if we take a look here and take our averages that they haven't been respecting, this corn market hasn't really been respecting recently, we do see we have some higher lows and some higher highs here as we are kind of following this trend line here to the upside. At the moment, we'll have to wait and see how this market responds here up near this 450 mark. If we do see the sellers continue to hold this market here between 450 up to 455, we do have some of these prior highs from the 4th of July weekend breakdown and the mid-November breakdown here as well, up there around 457. Seems to be a spot where the sellers really get aggressive, dating back here to June as well. Lots of overhead supply there that is keeping this market capped. With these higher lows though, the bulls seem to be pushing up here on the 450 to 457 mark. This market remains rangy and choppy, and we expect that action to continue, but we do have what looks to be a loose and sloppy uptrend kind of unfolding here. At the moment, though, this market just doesn't seem really in a hurry to go anywhere. Pretty sticky action here between 450 and 440. We do expect to see that continue. This market is going to expect to see more resistance up here until we can get some confirmation back above 457 and these prior swing highs. So that seems to be a really important point of control. And this corn market likes to continue trading around 450 here until we can get some closes back there above 457. So in the meantime, look for this thing to keep on chopping sideways. We'll see if we can keep following this uptrend line here that we've been trading around since August here. But at the moment, not really a whole lot of directional moves expected. We want to see this market either break this trend line or get a close back here above 457 before we can commit to any real big picture trend moves. In the meantime, look for this sticky, sideways, choppy action to continue in this corn market. Over to the crude oil futures. Last week was a pretty choppy week after visiting this the low end of this trend channel. We did see this market pushing down here and saw some long wicks pushing back up off of these trend line lows. It's pretty typical action here as this market continues to slowly drift lower. Friday's action here pushing right back up there towards the top end of that trend channel, and but good rejection there as a big sell-off into the close here. Printed this nice long wick and this nice inverted hammer candle here, looking like the sellers are stepping in and getting aggressive here once again as we neared that $60 mark. Look for this crude oil market to continue just following this trend channel lower with a nice slow bleed to the downside. This big long wick here is going to be offering some resistance, and we expect to see those bears start to push lower. If we get some offers down here below 58.27, look for this thing to start following the downside, flowing to the downside here, and following the bottom end of this trend channel. This market has been really choppy recently, pretty tight ranges here, and no real big breaks. So keep a tight leash on things and just kind of take advantage of the tight, quick moves here as this market doesn't have a whole lot of volatility to look forward to. Slow bleed lower is expected to continue, but be cautious of continued chop here around the $60 mark. Look for the bears to keep this oil market drifting lower. And last but not least, our equity indexes with a nice relief rally last week. We do see this market. Let me get our averages back up here on the board. Last week we did see a nice little relief rally with 4 or 5 days in a row here of upside here in this S&P futures contract. We did start to wave the flag and get defensive here with that big breakdown in distribution day we saw back here on the 20th, and leading up to this breakdown here throughout the middle part of the month as well. A lot of our mega cap names are starting to slip and not having a real good reaction to their earnings recently. Google and Apple are about the only ones that continue to have some good side. Those stocks still remain very strong, but the rest of the Meg 7 groups still showing some weakness. A little bit of a relief rally here on a light volume holiday week. Typical action of a relief rally here. We still aren't out of the woods. We don't have a follow-through day yet here, as this market did start to trade back above the major moving averages, but we still have this market making lower highs and lower lows on this S&P futures contract. We expect to see some resistance up here around the 68.65 to 6900, but if we do get those bids rolling early this week and a nice strong finish here on Monday, we could see this market start to get this big picture uptrend back on track. We aren't out of the woods yet, though. I still encourage a defensive approach here as we're going in. Like Apple and Google, though, there are still a few names out there that offer some good upside and still remain strong relative to the general market. So stay invested in some of those stronger names, but if these markets continue to slip below these moving averages and those mega caps can't recapture their earnings day ranges, we still have potential downside risk here and a potential corrective environment. The Nasdaq continues to be the weakest of the bunch here, as it did trade pretty low down here below that 50-day moving average. We do still see plenty of overhead supply all the way up here towards the high 25,000s to 26,000. At the moment, this market just looks like a light volume relief rally on a short holiday week. We could see that selling pressure start to step back in early next week once everyone comes back to work after the holiday week. But we are seeing some just kind of mixed reaction here. Some of the bigger names are showing some good upside while some continue to show weakness. So just kind of a mixed bag here at the moment. Indexes still need a little bit of more upside, a good follow through day to come in here and break out above some of these prior highs to really confirm that uptrend is back on track. So at the moment we are a little bit cautious here as this market still is in corrective territory, or potentially still be in corrective territory. The Dow has been the strongest recently, and it still hasn't made a new high as well either. So we could see some overhead supply from this recent breakdown start to step in, and more selling pressure continue. It's a selective environment. Find the relative strength names and stay invested in those, but encourage everyone to kind of have one foot out the door here, as we could still see a bit of a correction here. This market only did get to about a 5.5% pullback off of that all-time high on the S&P here. And so we still could see something as much as 8 to 10% here come back down here towards that 200-day moving average, which would be a good long-term support line, even all the way down here to 6160, which were last year's high, and that quarter one high as well. That has a nice line. This could be a potentially good support line if we do get down into it, but at the moment we'll just have to wait and see how this market plays out. Offers down here below Friday's high at 68.24 should get that downside rolling once again, and potentially put in a lower high and get this corrective move back on track. Just going to be something that we'll be monitoring here in the early part of the week, and have to keep an eye on and see what kind of reaction we get once everyone comes back to work after the light volume and short holiday week. So this is something we'll be keeping an eye on, and keep updating here as we move into the new week. Encourage everyone to still remain cautious here, though. There could be some downside risk here to come. We need to see that follow-through day confirm new potential uptrend, or continuing this big picture uptrend. So until we get that, we're going to encourage everyone to remain defensive and very selective here, and wait for a little bit clearer picture to form, and before we really commit to any directional moves. That's really all we got here after the short holiday week. Thank you everyone for tuning in. We will see you guys tomorrow night for closing comments on the first of the month.